all the setups that essentially took place last week. So last week was a pretty nice week, albeit it was a very accumulatory market for like the last half of the week, So, but there were still some nice setups that obviously some of us took part in on Monday, Tuesday, Wednesday, and Thursday. So let's get started. So going into Monday, all right, the levels were very straightforward, where the next drawn sell side liquidity was the swing low down here, right? And the next draw on buy side liquidity on the daily time frame was the swing high up here. Now, I remember on the mentioning as well on this data, of course, we'd seen 3 sessions of rise with a bearish reversal last week Friday. So we could anticipate one of two things. We could either anticipate another session of drop towards the daily sell side, and therefore a bearish continuation, or we could anticipate a bullish reset, considering price had traded into a key area of sell side liquidity within this imbalance. Okay, so going into the 4-hour time frame, so I'm just going to forward play this to the pre-open on Monday morning. Excuse me. Right. So 1 second. Excuse me. There we go. So that's Monday. Right, so the levels are pretty straightforward. We had the next draw on sell side liquidity. So obviously before the open of the session, right? So we're just before the 1 a.m. candle. I was going to remove these levels from obviously this week because I don't want it to be confusing. So the next draw on buy side liquidity was the swing high up here. Okay. And the next draw on sell side liquidity was the same as our daily low. So it was daily sell side target as well as the H4 sell side target at the time. Okay. So going to the 1-hour time frame, just drag these lines back. Right, so I'll just delete these because these are not necessary. I was just doing something with them earlier. So the 1-hour sell side target prior to the London Open was a swing low down here. And the 1-hour buy side target prior to the session open was also the same as the H4 buy side, which is the swing high. Okay, so these are the levels prior to the open on Monday morning. So Monday morning, this was the Asian range. So there were 2 ranges that I said you could have identified. You could have identified the bigger range, or if I delete this, you can see also the smaller range that I mentioned. You could also use. So one thing I always say is go for the most recent range, but always trade within a context of the recent range, within a context of a much larger range. So just to make things simpler and not confuse you guys, the pre-open range was this initial range. So we had point A, point B, point C. It's a very small range, right? So the general idea was before the open of the session, what we saw was vector acceleration into the H1, H4 buy side target. And then just before the London Open, price came up, right? And I mentioned, all right, so the best trade idea today will be a short because of course we have a purge scenario anticipating a reversal of some sort, right? So purge scenario with an anticipated reversal. So that was the general trade idea that I mentioned on Monday morning. Now, the condition to take that trade was because price created, one thing to always pay attention to is when price creates equal highs before the open of the session. Whenever that happens, always label that equal high. The reason being is because it's highly likely price will purge the equal highs before giving some sort of a move. So I mentioned for me to go short, I want to see price take out those equal highs. So London open, what did we see? We saw price obviously traded above those equal highs. The setup was pretty straightforward. All right. After price purged the equal highs, okay, we obviously had price contracted, rallied higher, and then finally gave a bearish break of market structure right here. So that was the BMS. So after the break of market structure, obviously this is a classical break with a breaker. AOI is to enter at the breaker, midpoint of the breaker always. So we see where these dotted lines are in the middle. So what I like to do, I'll draw a box around the breaker, and then these middle lines would indicate where the midpoint is. And that's where I would enter my short position, my pending order, with stop 5 pips above the high. And then the first profit target for me was the low of the range, which is also the same as the H1 sell side target. And the second target on this day, so I remember mentioning as well that price was to break below the H1 sell side target. Then it's also nice to look to fill this imbalance as an intermediate target and potentially also the low of the range. So that imbalance was an intermediate low as well. Okay. So target 1 is the low of the range. And then target 2 should have been the intermediate low. So this was the setup that took place on Monday. Okay, so it was a purge reversal short. Now, of course, one would have entered and price did play around that area for a bit before eventually giving us a shift and trading into the targets below. So it's a pretty straightforward purge reversal. Okay, so this is one of those setups that you simply should not get wrong. Purge reversal with a purge of the equal highs at the beginning of the London session. I'm not sure if anyone has any questions about this. All right, let's go to the next one. So the next one will take place on Tuesday. So going into Tuesday, we've seen two sessions of drop. So what's the general idea? The general idea is now we update the levels to equal the sell side still remains the same at this equal lows, but now a buy side is now different. A buy side is now shifted from these relative equal lows below to, from our buy side has shifted from this initial short-term high to this imbalance right here. So I'm just going to label it as such. It's daily buy side target. Okay. If we go down to the 4-hour time frame, what can we see? Well, just before the European Open, right, can see the price is obviously delivered on, just delete these. Price is obviously delivered on a secondary low. So if you were to look at this count system, it's very simple, right? You have the initial high, price came down, delivered the first expansion to the downside. All of this is price accumulating before giving us that shift, which looks like a potential breakout to the downside. The levels for the buy side target was the swing high as the H4 buy side target. And for the sell side target, it will be the same as our daily low down there. So taking a look then at the 1-hour time frame, the next draw on buy side liquidity, so just going to update these levels again. So just before the European Open, Monday, sorry, 1 second. There we go, Tuesday. And then the sell side was the swing low. I do apologize, so just to update that properly. Initial sell side target. So I did at 1 p.m. instead of 1 a.m. And then on the 1 hour, again, you're looking to do the same thing. So the pre-European Open ranges, as well as the pre-London Open range as well. So the H1 sell side target will be the swing low down here. And then the H1 buy side target would be this imbalance up here. Okay, so these are the levels. So then if you go to the 15, actually, before we go to the 15 minutes, just a quick note on the structure. So structurally speaking, what can we anticipate? We can see prices giving us first expansion, contraction, secondary expansion, contraction, third expansion. And then bearing in mind that obviously when price gave us this third expansion, it immediately traded back into the range. So this is a trap at the top, came down, rubber track back in, and then obviously did the same thing back down. So all of this is price accumulating and trapping around the secondary expansion. So all of this is secondary contraction before price delivered on this low to the downside, giving us that third expansion. So at this point, we are on the 1 hour time frame in a reversal cycle, right? So we've seen the initial expansion of the initial session of rise, market contracted, and now what we can see is that second session of rise going up. So we're within a bullish cycle on the 1 hour time frame. So therefore, if you go to the 15 minutes time frame, and obviously the 4 hour is still bearish because on the 4 hour, we're still within the second expansion to the downside. What can you see? Well, I can see that price is obviously accumulated, right? I can see that price has created a bearish order block preceding the bullish break outside of the range. Okay, so this is now a bullish break criteria. Okay. So price is traded into also H4 buy side target. So price is taking out the number one key area of liquidity that obviously we need to ensure price that obviously is the most important one for price to take out. So the H1 as well as the H4 buy side target. So our bias within a context of what's going on is that we're anticipating one of two things. Because obviously this is a break scenario. We can either anticipate a BRC where price can give us a bullish continuation from the order block, or a BRR where we're looking for a bearish reversal to the order block. So with a BRR, we'll be looking for a 5 minutes confirmation as opposed to a 1 minute confirmation. The reason being is because if you want to get a BRR 1 minute, price would first need to retest the order block. Considering that hasn't happened, for us to have a valid entry confirmation to sell back towards the order block, we need to see a 5 minutes confirmation in London. So going into London Open, obviously I was like, okay, just waiting for that 5 minutes break of market structure. Doesn't happen. Price simply just kept on rising and rising and rising. And this was on Tuesday. And then eventually taking out the next draw on liquidity to the upside, right? So on this day, obviously, we're looking for that short scenario to take place, and the price took out H4 buy side target and then traded into the range. Again, there's still no signs of a break of market structure on the 5 minutes time frame. And then eventually, obviously, price gave this BMS. Okay. So this would have formed a valid area to have looked for your initial entry confirmation. So how would this have worked? Very simple. It's a classical break of market structure, right? You would need to trade from the last up close candle. So within the context of the last up close candle, right, there are many areas you can look to trade. So you're looking to trade anywhere within this channel. You can enter at the imbalance right there. You could enter above the short-term high right there. You could enter at the last up close on the 1 minute time frame, or you simply could just choose to just trade from the 5 minutes last up close candle on the 5 minutes time frame. It's entirely up to you. So say you went short there, and then obviously your stop goes 5 pips above the high, right? First profit target in this case should be the H1 BST. Why? Because whenever you price breaks a key area of liquidity and it travels away from it, and you can get a 122 to a retest, you should always take it, because you remember your aim when it comes to profit taken is to take profit at the next most reasonable draw on liquidity. And a broken liquidity level becomes a key area of support or resistance. So if price obviously trades above this area, price could potentially use this area as an area of resistance and retest this zone before a potential rally. So this is one of the reasons why you shouldn't just blindly say, oh, I'm just going to aim for price to trade back to the order block. If you can see that price is broken above a key area of liquidity and you can get a 122 to a retest of that area, you should set that as your first area of profit target. And the second profit target objective would obviously be our bullish order block, which is an unmitigated zone. So what happened on this day? Surprise, obviously, triggered entry and just hung around here for a bit. Looked like it was going to fall, but eventually, just before because this was very close to the New York Open, right? And one of the reasons why you should always be cautious when trading close to New York, and I'm going to talk about this in the training today, is that price could easily just swipe back up in New York and re-induce. And that's pretty much what happened. So price re-induced in New York, took out the stops, and then in New York, they ran, right? Ran and basically hit the first target, which was the H1BST. But on Tuesday, there wasn't really, so the initial entry confirmation resulted in a stop out, but that happened so close to the New York session that there wasn't any opportunity to re-enter that position. Okay, so that was Tuesday. So Monday, we had a nice short purge reversal. Tuesday, price vector accelerated away from the Asian range, gave a 5 minutes confirmation as that was the only valid opportunity to have engaged in, but that resulted in a stop out. So let's go into Wednesday. So going into Wednesday, all right, we've seen the price had obviously delivered on 2 sessions of rise. No, sorry, we've delivered on a session of rise on Tuesday. So we can anticipate one of two things because price had already traded into our imbalance on the daily time frame. So we could have anticipated for price to do what? To trade from the buy side within the imbalance straight into sell side to the low of the range, or for price to accumulate before reversing. But either way, the bias was still bearish. So we had 2 sessions of drop, although we did have this initial session of rise. The reason the bias was too bearish is because the 4-hour time frame is still within a bearish cycle. Okay, so you must always aim to match up all the time frames with each other. So if you take a look then on the pre-open levels, we can see that the H4BST is the swing high up here. Okay. And the H4 sell side target is this imbalance down here. Actually, what I'll do, I'll just use the daily just to be a little bit quicker, a bit faster. All right, so that goes at the bottom. It's the H4 sell side target. Perfect. And then on the 1-hour time frame, we can see, and this is again, like some of you guys have to do your homework based on backtesting and finding the examples, right? This is literally how quick it is to lay up your charts, drawing the levels, and then do your assignments, right? So like once you get used to it, this is something that honestly takes a very short time frame to do. So the 1-hour sell side target is obviously the swing low down here. Okay. And again, notice this little imbalance. Do not ignore the small imbalances, right? That can cost you a good trade. So it's a very small imbalance, but that imbalance is the H4 buy side target, right? H4 buy side target. No, sorry, H1 buy side target. No one corrected me. I hope you guys are still awake.
Yeah.
Perfect. And then if we go down to the 15 minutes time frame, right? Now the question is, what is today's setup? I'm just going to delete these so it doesn't get in the way of what I'm about to show you. So today's setup was again based on how price reacts around the Asian range. So Asian range was pretty simple, right? We had obviously your ABC, right? It's always looking for that ABC. So there were two ways you could have identified your ABC, because obviously price was accumulative in the whole of at the beginning of Asian session, and then it dropped. But the ABC just before the London was 1, 2, right? So ABC like that. Okay. So essentially what happened was price came down, took out the low of the range European Open, and then from the low of the range, vector accelerated. So this is a trap because there's a rower track back into the range, but then traded immediately outside of the range. But that doesn't define a break. Second candle comes down, shakes out the low of the range, right? So now price is taking out both H1 BST and H1 SST. Again, if you're sitting this, watching this in real time, price is simply trapping around the Asian range. That's all there is to it. So the next candle, then vector accelerates to the opposite direction, and now you have the definition of a purge. Why? Because prices come directly from the low of the range, vector accelerated to the high of the range, and has taken out the H4 buy-side target, as well as traded into the daily buy-side target, which is the imbalance. So again, the only scenario that makes sense to engage in this context is a short, right? So it's a sell opportunity. So on this day, there were various ways you could have traded this short. I'm going to tell you how I traded it. I'm also going to show you like the conventional way to trade it, because some of my entries, if I see a great opportunity to get a great entry, I will take on that. I will take on an opportunity. But again, it's like whilst you're building experience, learn to enter the conventional way, and then you can then engage in more potentially riskier, but also much more rewarding ways. So what I mentioned on this day was that price had given a break of market structure in European Open. Now, when this typically happens, what I do is I anticipate price to obviously take out I always anticipate price to take out the European eye in London, always, okay? So I'm like, okay, price is giving me a classical break of market structure. There isn't a breaker, so my interest is last up close candle. Now, remember, there are 3 areas price can retest after a classical BMS. Price can either retest the breaker if one has been created. In this case, it hasn't. The last up close or the recent high. Now, because I always anticipate price to take out the recent high, what I did is I was like, okay, it's likely price will take out the recent high. So if you guys look to the picture I sent in the group chat of my position, I basically got in, I put my pen in order. So short position at the recent high, just at the beginning of the London Open. All right. And again, stop going the conventional 5 pips above the high. And my first profit target was to the recent low, was to this low, the low of the range, right? That's a 1 to 13 R that it gave me. And then my second profit target was to this, to the close of the imbalance, basically. So this was my trade. This was my position. So essentially what happened, price came up in London Open, triggered my entry, right? So it took out the recent high, hung around there for a bit. Now, if you're not an experienced trader, you probably, when price came close to your stop, maybe I've been scared, close your position. No, we never do that, because the best entries are usually the most uncomfortable ones, but I held on to that. And then eventually price gave a shift, and it was the biggest trade of the week. So this is the biggest position for the week. Price came down, took out obviously the low. This is the first trade that took profit at 1 to 13. But as you guys already saw, price eventually gave that bullish reversal to the upside after taking out the low. So it didn't, my second profit target didn't quite get hit, but I moved my stop loss to break even. My first position took profit at the low. Second position, I got stopped at break even because price eventually came back up towards that area. But that's regardless the point. So this defined a very nice R to R based on my entry. Now, the second way you could have entered, and this is the conventional way that you guys should enter at the beginning anyways, is you could have also waited for price to have taken out the high. So rather than entering just like that off the BMS in European Open, you could have waited for price to also take out the high in the European Open. Sorry, the high in the London Open. All right. And then obviously waiting for a break of structure afterwards. So obviously in this case, price came down, didn't break structure, delivered a higher high, delivered an intermediate low, contracted, delivered a lower high, and then gave. So I'm just going to do a bar replay so you can see this very clearly, right? So price did this, intermediate low, break of structure, imbalance. So you could have also waited for this and entered at the imbalance. So this is a secondary break of market structure. You're going short at the imbalance. Again, stop loss 5 pips above the high. So you just sort of 5 pips would be above the recent high, right? So above this high. That's where your stop loss would go, right? And then, of course, your profit would be, your first profit target would be at the recent low. So again, this is a 1 to 6. So this is one of the reasons why for me, it's like when it comes to entry, always learn a conventional approach, but there's always ways to expand your R to Rs if you can nail more accurate entries. So the more conventional entry is getting that imbalance secondary break of market structure in London Open, price trades in would have triggered you in. But this would have been a relatively easier trade to have entered because again, you wouldn't have seen price go close to your stop loss. Like if you had entered the first way and you weren't experienced, either you would have got scared or whatever reason and closed your position and missed out a really good trade. But with this one, this one you would have just seen price trade into your entry, and then you would have seen price shift away from it relatively quickly, and it wouldn't have gone back to that area until after your first profit target had been hit. So this is a pretty nice trade on Wednesday. So again, on Monday we had a nice PR opportunity. On Tuesday, I had a loss on that day. And then on Wednesday, I had a nice win back, obviously, giving me this nice 1 to 6, 1 to 7, 1 to 13 to the low of the range. But this was a purge reversal setup, right? And this is one of the reasons why the first profit target is your most important target. You shouldn't set TP1 and TP2 at some ridiculous place. Always aim for the most recent area of liquidity. Another area you could have aimed for your first TP would have been the H1BST reset, and then your second TP would have been the low of the range. That could have been another way you could have taken a trade, which would have meant obviously your first profit target, as well as your second profit target would have been hit as well. So in hindsight, that's what I should have done because I was on this derivative. I was very confident for whatever reason price would trade to mitigate against the Asia of this day. So I put it there, right? That's why I was like, okay, I'll just trade and take my second profit there. At least that way, if price comes down to mitigate against the previous day, that would give me a better reward. But in hindsight, right, what would have been a much more better practice in line with the market structure would have been to take the first profit at the retest of the H1BST, which is exactly what I said earlier one should do. So when price breaks a key area of liquidity, if you can get a 1 to 2 minimum to that retest, do it. And then a second target should have been the low of the pervasion range, and that would have netted me a much more bigger gain than me just taking half of my trade at this low and then having to get stopped at a break even. So I would have actually made a lot more money from having a much more reasonable profit target within this Asian range, right? And this is one of the beauties of trading, right? Is, you will, no matter how much you experience, how great you become, or, how profitable you become, you will make mistakes from time to time. And that's why you should always, always be reviewing, always be journaling, always be working on yourself, because, that's the beauty of this pursuit is there's always room for growth. And that's why I absolutely love trading. It's always room for growth. So that was on Wednesday, right?
Sorry, what's up? I've got a question.
Yes, go for it. I
Yeah,
love questions.
yeah.
It
So
doesn't
I
feel
was
like I'm talking
thinking,
to myself that way.
yeah, yeah, that's why I want to ask you. So, uh, actually, because the entry that you took, right, you took it at the top of the how do you call it? Like you're waiting for a purge of the London high, right, or the Asian
Right,
high. Yeah.
right.
So
So,
yeah.
no,
What
so the
makes
entry
you
I took it off this initial BMS in European
yeah
Open, but rather than me entering the classical way at the breakout or last of close, I anticipated price to take out the high. But I was also ready to get stopped out. So I was like, okay, one of two things can happen. Either price would like just purge the high ever so slightly and run away in line with this BMS, and then if I get stopped out, right? So let's say price decides to just break above the high, then I get stopped out. I just re-enter with the second break of market structure in London again. So that was my rationale because the R to R, regardless of whether European or London, was pretty good. So I decided to enter at the high of this BMS because remember, after a classical BMS, price could also take out the recent high before running away. Hence why I always say use a 5 pips above the high stop just in case that happened, so you don't get stopped out prematurely.
right, yeah, because I've never encountered a setup like this. So I was thinking like 5 pips is enough because, like, as you said, right, it's quite a risky one, and price could just continue to trade up. So it's like 5 pips a general way to place your stop loss here.
Yeah,
Or
so this is a foundational rule. I know we haven't gone through the entry rules yet. When we will,
yeah,
this is one thing that I'll teach you. 5 pips above the high is standard practice.
right,
Is 5 pips enough? Not always, but most of the time it is. There are times when if price was to take out a 5 pip stop, then it's because price is either breaking above and will give you another BMS, or price is just going to keep on rallying, right? But
right.
if price is simply purging the recent high, meaning it just like traps above the recent high, usually 5 pips is enough to keep you in the trade.
Yeah, yeah, clear. Thanks, man.
Okay, all good.
Yeah, all good.
So, is there any other questions before I move forward? Mr. John, thanks for joining us. Good morning. I'm not sure if you just woke up, but thanks for joining us.
Morning, bro. Yeah, no, just had a couple errands I had to run quickly.
It's all good. It's all good. I know it's quite early this week's session, and I do apologize for that if it's inconveniencing.
No, it's all good.
So we're on Wednesday now, so now going into Thursday. So just to catch you up, so just to be a recap. So we had obviously 3 setups this week. Monday was a purge reversal setup, which worked out really nicely. 1 second. Yeah. So Monday was a purge reversal. Remember, price took out the equalize, gave a setup, and then that was a short. Tuesday was a stop out, so I took a loss on Tuesday as a result of a failed BMS on the 5 minutes. And then on Wednesday was obviously the infamous purge reversal that took place and took out the low of Asia. So these are the 3 different setups for this week so far. So 2 wins, 1 loss. So now let's go into Thursday. So Thursday was, again, going into this day, I mentioned that obviously price had given us that 2 sessions of rise, but notice how these are like really nice, like especially Wednesday was a very nice contraction candle, right? So I was like, I'm still bearish. So this is not enough reasons for me to be like, oh, maybe price is going to keep on rising, right? As a trader, is like sometimes you need to know when to change your bias, but you also need to know what confirmations to look for to maintain your bias, right? And obviously the fact that price is climbing, and I was like, okay, it's Wednesday, maybe Wednesday is going to give us the high of the week. If price takes out this high, then it's highly likely we're going to see bullishness. That it's been a bullish week, right? So I was pretty confident. Okay, at this point, price could give us bearishness for the rest of the week. So it's 2 sessions of drop. We're still bearish is still the appropriate bias on Thursday. So going into the 4-hour time frame, I'm just going to forward play again to just the pre-open. So H for BST was high of the range and H for SST was the low of the range. And then if we just go into the 1-hour time frame, again, we're looking for that open. So European open is at 3. And London open. So European open is at 2 and London open is at 3. Okay. And H1 SST is obviously going to be this initial swing low down here. And H1 BST is going to be this initial swing high up here. Okay. All right. So sorry, I'm just trying to find a few things here. There we go. So these are the levels. So we go to the 15 minutes time frame. So with this one, it was pretty nice. I'm just going to remove all of this again, just so you show you guys from scratch what it was. So this is general idea. So just before the London Open, we saw obviously price had given us a bullish break above the high of the range, right? Now, there's 2 different ways you could have spotted your Asian range. You could have either done your Asian range using this initial high or low, right? Or you could have done what I did. So I just went for the recent ABC. So 1, 2, 3, right there. And then price purged the low and then went up. So at this point, I was like, purge reversal is the best setup. So I want to go short, right? Obviously, same as Wednesday, right? We had a purge reversal. So same as Thursday, purge reversal. You get days like that where they're consecutive. You also get days where it takes, you don't get PRs for like days on end. But now London Open, this would confuse a lot of you guys if you hadn't seen this before. Price obviously came down and took out the low. Now I mentioned as well on Thursday, I was like, it's a break and market structure in the 1 minute time frame, so ideally I want to see price take out this initial high and then go short. So that was the general idea. But what I noticed was, obviously, on the 5 minutes, we also had a break of market structure. And I put out a picture in the Discord channel. I was like, look, guys, be aware, break of market structure. So London Open, this is something you could take. But London Open came, right? And for me personally, I wasn't just going to blindly sell in the imbalance and then put my stop 5 pips above the high. Why is that? Because the R2R would have been completely shite, right? Because again, we want at least 1 to 2s, right? And if your R2R reward is potentially going to be less than a 1 to 2, then it's just not worth taking that position. So price anyways traded here. So I was like, I want to look for a 1 minute confirmation when price traded in here. It did that, and then but it just ran away. But then when price traded below this area, it clicked in my head. I was like, okay, because this is where practice comes in, and seeing this over and over again also comes in to play. I was like, okay, immediately 15 minutes BMS. Now, what type of a 15 minutes BMS? Classical BMS. I was like, cool. So I posted a picture in the group chat because I know some of you guys probably wouldn't notice it. It's like 15 minutes BMS with the last stop close candle. So this is now my new AOI. Why? Because again, the market is fractal. The same thing happens on every single damn time frame over and over and over again. So I was like, right, 50 minutes BMS with prices obviously giving us a classical break, last stop close candle is AOI. So what's the general idea? I want to see price trade into here, but I'm not just going to place a pen in all of them and then stop loss above the high because that's just foolish, right? It's a bad R2R. But I want to see a 1 minute break of market structure within this area of interest. That's for me what I would go long on. Now, there's no guarantee price is going to trade back into that area. I actually didn't think that was going to happen, but I highlighted it. I set a price alert and I went to watch some anime. And then what happened was price did trade into it and my price alert went off and I was like, oh, maybe today there's going to be a trade because I was already starting to think there wasn't going to be any. So price traded into AOI. 1 second. All right, so price traded into, so vector accelerated nicely into area of interest. And at this point, the only thing to wait for was a bearish break market structure. So, which is pretty much what we got. So we got a 1 minute bearish break of market structure within the 15 minutes bearish order block, fractal. This is what fractal means, right? What kind of a break of market structure did we get? We got a classical break of market structure with a breaker. So where's our AOI to get in? Our AOI is to get in at the breaker. Simple as that. So stop loss goes 5 pips above the high. Now notice how this is a much better R2R to enter off the 1 minute than it is to enter off the 15 minutes, right? So it's a significantly different R2R. So we get in the middle of the breaker, stop loss goes above the high. And then profit target goes where? First TP goes at the low of the range. This is the first profit target. Why always the recent low? Because this is a purge reversal scenario. Just because price has taken out the H1 sell side target doesn't mean price isn't going to reverse after taking out the recent low. So always aim for the recent low. And then a second profit target was, because again, bearish was the bias. And I was like, price trades below this low, it will likely trade to the H4 sell side as well. So what I did as well on this day, I'm going to tell you what I did. I'm going to tell you what I should have done, right? But what I did was I took my second profit target to the H4 SST below, right? And then here's what happened. So price came up, triggered the entry at the breaker, and then immediately proceeded to give a nice shift, right? Well, it kind of hung around for a bit, doing all this nonsense that price usually does. And then eventually gave a nice shift, and eventually just around the beginning of the European Open, it took out the first target. 1 second, let's just make this so you can all see. Right, so it came down, took out this initial H1 sell side target, and then rallied back up. And then we're just doing randomness, right? And then eventually, boom, hit the first TP. Now, I wanted to just touching two things here, because I know Sean got the same trade and held onto it very nicely. I think John, you did as well, held onto it very nicely. Now, a lot of the time, because it's two different things, right? If you're watching a chart in real time and you see this happening, of course, you're going to get anxious. You're going to start having, what do you call it? Fear of taking a loss, right? Fear of loss, and then you might end up closing your trade prematurely. But if you weren't watching, I remember at the time, I wasn't actually watching this in real time. I was out for dinner. And then this happened sort of like towards the beginning of the European Open, of New York Open, right? And then eventually we had that shift. It's important to always let your trades run. Now, after your first profit target has been taken out, it is usually very prudent to move your stop loss to break even, okay, to protect your second position. Because then what happened was, after price took out the first profit target, what happened was an immediate reversal back to the high of the range. And obviously price would have, if you didn't move your stop loss to break even, your second position would have been topped out at stop loss. If you did, then your second position would have been stopped out at break even, okay? So that was Thursday. So again, a very nice day. We had a partial closure on that day, same thing that we did on Monday, all right? And the setup on this specific day was a purge reversal. Any questions? Okay, I know it's a very interesting kind of purge reversal, right? Because usually purge reversals, you want to take your 1 minute entry, right? But there's a purge reversal that led to a 15 minutes BMS with a retest of the order block, and then we take that 1 minute BMS within the bearish order block on the 15 minutes time frame. But what is clear, of course, from an outsider's perspective, right? If you were to be looking at price action between Monday and Thursday, what is incredibly clear is that price has been accumulating, right? It's been doing, so this crazy accumulation, right? And one thing I always say is the moment you notice price accumulating, always assume it will keep accumulating until it breaks out. But never ever presume that the next move will be the breakout move. Never, all right? It's a very easy mental trap to fall into. So whenever you see price accumulating, always assume that it will keep on accumulating. So that was Thursday's purge reversal setup. Any questions about that? So going into Friday. So I'm just going to update these levels. So we have the new sell side, buy side still stays the same. Remember now, notice how Thursday's high did not take out Wednesday's high. So at this point, again, my bias for bearishness still stays the same. So as long as prices respect to this high, right, we're still within that bearish cycle. So again, general bearish bias was the same. So despite Thursday being an accumulatory session, right, I was still bearish on the daily time frame. So going into the 4-hour time frame, all right, so just going to forward play this into just before the open. So we have the next run sell side being this low down here, next run buy side being this high up here. When I can see, of course, is the same stuff, right? See the initial expansion, secondary expansion, price contracted, took out this short-term high. So all of this is price accumulating within the secondary expansion of our bearish cycle. However, if you take a look on the 1-hour time frame, remember I said earlier that the 1 hour was bullish from down here, right? Because why? Because it completed this bearish cycle. So this is the initial expansion to the upside, price contracted, secondary expansion to the upside, price contracted, third expansion, and then accumulation, and just a lot of craziness, right? But either way, when price did this, it came down, break market structure on the 1 hour. So at this point, I was bearish on the 1 hour time frame. So I was like, right, all of this is price accumulating within the first bearish expansion on the 1 hour time frame. So let's take a look now at just before the open of the European session yesterday. So H1 BST is the swing high up here, and the H1 SST is the swing low down here. Okay. Oh, no, maybe not. Maybe not. Okay, H1 SST is the same as the H4. Right, so once we have those levels in place, and take a look at the 15 minutes time frame, what was the range? The range was pretty clear. We had the initial high, initial low, price has been accumulating for the most of Asia. Price obviously, so general idea was before, so just before the London Open, I saw a bearish break. So I was like, okay, this is the order block responsible for this break. So therefore, I'm anticipating one of two things. Either BRC from the order block in London or a BRR to the order block, but on the BRR, I'll be looking for a 5 minutes break of market structure. So what happened was price obviously broke below the H4 sell side target, as well as trading below the order block. So what I did was I waited and waited and waited until I grew gray hairs, because yesterday was so long. Waited for that 5 minutes break of market structure. Price was falling, falling, falling. So again, there was no opportunity whatsoever because price was just giving a straight move. And then eventually price hit a low, right? And then proceeded to give what appeared to be a break of market structure. Exciting stuff, right? I remember, I think I spoke with John at this time because John was looking at the same thing. And I was like, should I take it? Should I not take it? But then I was like, you know what? I'm always going to take a setup that presents itself within the right context because that's how my averages add up. So this is a BRR, break of market structure with a breaker. Where does one enter? One enters midpoint of the breaker. So where these dots are, this is the middle point. But actually, no. So I remember on this day, so the classical entry would have been to enter at the breaker, but that would not have been worth it because I remember at the time I was watching this and price was falling. I was speaking with John. I was like, you know what? I think what would be better would be to enter near the last downwards candle because if there was going to be a setup, we're going to find out very fast. If it wasn't, we'll also find out very fast because it gets stopped out. But also, right, because of the general way price was moving, it was just made a lot more sense to enter at the lower extreme because price was at some point falling, right? And I was like, okay, it makes more sense to just enter at the last down close with a stop loss 5 pips below the low, because that way, if it doesn't work out, you find out in a short space of time. So, and then I set my first profit target at the bullish order block, because if you had entered here anyways, you wouldn't have got a 1 to 2. So just not, there wouldn't have been a setup anyways. And so the bearish order block is your first profit target. And the second profit target for me was the short-term high where the order block was. So this is how I trade BRRs, right? So essentially what happened, price came down, took in entry, right, into the market, right, triggered, and then was hanging around here for a bit, right, and then eventually rallied, and I put a screenshot of this in the chat, and then price eventually came up and actually hit the first profit target. And then what happened after that? Well, the same thing has been happening for the whole week, a big ash reversal. But then it wasn't even a case of, oh, price is finally going to give us that continuation to the daily sell side target and give us that continuation to the daily low. No, all right, price took out the first profit target, and then eventually, what did it do at the end of New York session? It eventually rallied back into the range. So again, continuing, remember what I said, right? Price is accumulating, always assume it will keep doing so. So price simply just kept on accumulating for the duration of the New York session, okay? So this was last week. It was a pretty solid week. We did see price that obviously giving us that at least one really good setup, which happened on Tuesday. Really, really good setup. We did a very nice R. So this is probably the biggest R2R that I've seen and I've taken in the past 2 weeks. And the Monday setup was also really nice R2R. Tuesday was a loss, right? So there was no way one could have made Tuesday a profitable session because the only setup was that 5 minutes BMS towards the end of London, right? And then Thursday again was really good session, right? So again, having those profit targets, precise profit targets, was key to you taking a profit on Thursday straight because it was an accumulatory market. And yesterday again, half of the position was profitable and the other half resulted in a stop out at break even. And then price eventually rallied again. So this week was, again, if you're a new trader, right, this is what I would classify an incredibly tough trading condition because it was just predominantly accurate. So if you traded this week and you ended this week in a profit, massive well done, because the conditions this week was absolutely atrocious. You know, liquidity was just not there. So hence why price just wasn't giving the big shift, the big moves, right? But there was setups, and it's all about how you'd manage your position around these setups and ensuring that you were taking profit in the right places, right? And ensuring that your stop losses were moved to break even after your first profit targets were hit. These are very, very core foundational practices that you should have in your trading rules. So what would have defined you being profitable this week would have been your level of skill and experience and your level of focus within the marketplace, right? But if you were profitable this week and you traded this week, a massive well done. Because this is definitely what I would classify a tough trading condition on pound dollar, and it does happen from time to time. So yeah, so does anyone have any question? Any questions? All right. No further questions, then what I'll do. So obviously some people that are coming in for the training that we have within the next hour. So you guys just go get a coffee, just, relax yourself a little bit. I know we've gone through an hour of just looking at last week's price action, which is obviously very accumulatory. And then we'll start the training within the next, so let's say we'll start trading at 3:05. So 3:05 UK time is going to be 8:05, right? So we start at 8:05. So again, just go refresh, get some coffee. I'm going to do the same as well. And again, Eric, Sai, thanks for plugging in. We'll start our training at 8:05. Okay, see you guys shortly.